Taco, today all about payments, payment problems, credit card companies. But first, I think we need to talk about our Dutch. Yeah, I was going to say proud, but it's not really something to be proud of anymore.
Yeah, we had Adyen,
Yeah,
a
Dutch
stock
company.
with 5% of the Dutch index,
Yeah.
and it went down 40%.
Yeah, 40%, 40%. Yeah, that's something I haven't seen a lot of times.
No, me neither.
I mean, of course, it happens to smaller companies, but like this is like you say, it's a heavy weight in the Dutch index. Also, the Dutch index affected quite thoroughly, quite heavily by that. And what is the case here? It is a company. Are they losing money? No. Are they shrinking? No. They had a growth of their revenues of 21%. They had a growth of their EBITDA also of about what was it? I think 23% or something. It was only one point that did not fulfill as well. And yeah, this is a typical example of a growth company. So valuations are really high. The similar valuations as, for instance, Nvidia. Next week on the 23rd of August, Nvidia is bringing out figures. If they don't comply with the estimations,
Everything
the
must be
same
perfect.
scenario could happen there, because it's these companies that are overly valuated now based on future expectations. If they do not fulfill those, wham, and that happened here today.
It's what
40% of the share price. It's something that you don't like if you own those stocks. If you have sold put options, it's very difficult. You can buy time by rolling it, etc. And then it will be fine, probably, because I certainly hope it's not a second wild card, but it's a painful affair for people investing in this company today. They are facilitating payments. Two companies that are also facilitating payments, and they are, I wouldn't say in trouble, but people using them, they are
The credit card
companies.
Yes, and we had the news that in the second quarter, the debt of the households in the US reached the level for the credit card of $1.03 trillion. Well, in perspective, the total debt of the households is around 17 trillion, but that includes the mortgages, also the loans for cars and for study. Well, all the levels of the debts increased, but the debt for credit cards actually increased more. It was around 16% on an annual basis, and especially the second quarter was like more than 5%. So I think the consumers are quite creative to maintain the level of spending for their purchases by using more credit facilities. So that's maybe a positive thing, that the spending at least stays at the same level, because people, I suppose, have less money with the inflation. You have more higher prices. But on the other hand, it is a loan, and the interest rates are around 20%. You must pay back a certain amount. So
it's not like you can postpone it. Normally it's on a monthly basis, or you start paying off, or you have it's actually a credit line, no? So like
it is something like that. But I was impressed that it's actually the money you have to pay back. It can be very low. So with the 20%, it can take you like 15 or years. So it's like a structural debt, and I think that's in the end not really the purpose of a credit card.
No.
So the good thing is they are creative to maintain the spending on a certain level, but for the economy in the total, if there's a limit literally on the card and people have problems, then of course the money needs to come from somewhere. So I see a big problem there. But on the other hand, there are credit card companies for you as an investor. So it might be actually a good business, to invest in that credit card. However,
I did a bit of a fundamental approach to these. I didn't look really technically this time, because normally when we do the vlog with Casper, it's always I do the charting and stuff. But now I looked a little bit more fundamental. And what you see with Visa and Mastercard, I took the Benjamin Graham valuation model, and it's basically also the model that is being used by Warren Buffett, for instance. So it's not something that is completely strange to use. If you look at the model, what does it do? It actually it's a formula that calculates, it takes in consideration the earnings per share. It looks at the growth of the price earnings, so how much will it grow over time. Then they have another factor, the growth rate of that earnings per share, so how much will the earnings grow over the next 5 years. They take in consideration the average yield over the past decades on a AAA corporate bond, which is 4.4%, and the actual yield on a AAA corporate bond, you can look it up at the FRED website, it's pretty simple to find that, it's a 4.95. So if you look at that, the current stock price of Visa is 238, and the intrinsic value of the stock is 250. So you might think, hey, that's good. But what you actually want to do is you want to buy the stock below that value. What they say is, if you can buy a stock at 65% of the intrinsic value, you're doing a good job, you're doing a good business here. And in that case, the ideal share price of Visa is 162.9. However, and I'm going to say something that might confuse you a little bit, but we share these models in the screen with you, is that they say that you have to adapt the Benjamin Graham model to more nowadays standards, because they think a 2G growth rate is too much. That the price earnings will not multiply, they will more or less stay the same. So in that case, one of the factors is being reduced from 2 to 1. The acceptable buying price of Visa is only 93.35. So that means that you're actually buying it at this moment, if you would have the stock, for 165% too expensive. If we look at Mastercard, I won't go back again through all the parameters, all the different factors, but here in this case, actual share price is 393, intrinsic value 386. So hey, 386, 393. So I'm actually already buying it above the Benjamin Graham model intrinsic value. Are we looking at the acceptable buy price of Benjamin? Then it's $251. So there also, again, almost $140 you're paying too much for the stock. Do you bring it to the nowadays model with the adjusted factors? The acceptable buy price would be 141. So here you're paying 180% actually too much for Mastercard. So both companies are not really cheap, and be careful with them, you know, because it's not something that, I mean, I'm not really worried about it, because they're also many times very decent companies, but the growth is important here. And if they don't, and we saw today what happened to Adyen, if they don't comply with growth rates of, in this case, 17% for Mastercard and 14% for Visa, then that share price might also get hit quite heavily.
It's quite interesting. So it's not a cheap buy, but on the other hand, there is a big business, big company names.
And if we see that happening, those drops, then somebody else that was also in the news.
Everything is in the same line, more or less. Michael Burry, famous of The Big Short in 2008, he had a short position. He opened a short position, was announced, quite a big one. I first directly thought, okay, it's nice to hear that, and people might think, oh, this is going to happen. But of course, he's not always correct, although he has a great track record. But still, I think you must not really focus on what is said in the market. We also discussed today from what kind of position does he have. Well, he appeared to buy put option, but the details of it, it's very difficult to see.
You can't really say whether it's good or bad, or you should be worried about it. I mean, because he said it a couple of times before, and he was right one really big time. And there's a very, if you haven't seen it, the movie The Big Short, go and watch it, because it's really funny if you like investing, and it's very, I mean, you will see here a lot of things that are familiar, but
don't change your strategy only based on that. Like we said before in the vlog, if you're someone here or your neighbor, this is not the same, but still you need to think yourself. Although today we saw the Adyen and the markets, for example, the Dutch market going down, and you might think, okay, there we go. But also that was a very common mistake to not see, okay, the confirmation of something. But well, on the other hand, he wants to have a short position. That's interesting, a big short position.
A big one, yes.
So it's interesting to know, but please still make your own analysis based on those figures and the situation of the credit card, for example, the business, see what's happening there, see the company, and then decide if you want to invest.
Yeah, what we dare to see. I mean, there's always something, I think. I mean, we both are not newbies in this. I mean, there's always something going on. But if you ask us both, it's like there's some turbulence. The water is not really calm, and you see that it's getting. We had a really calm first 6 months with higher interest rates. The market is not responding, but in a blink of an eye, we are going down with the market. It's it's not panic, but it's a little bit like.
That's true, and we are in August still, so it was actually quite an easy way to make money. So we are always aware, and the investors also. But on the other hand, it might happen someday, but maybe we go up again, and then after a month it goes down. So it's very difficult to say, okay, he says it, now
And
we
you're also
must
not
sell.
investing if you make a wrong decision. You're not investing for a week. You have
No.
to invest for a longer period. If you bought Adyen at a higher price, well, you did it because of that moment the price was right. Yeah, you can take your loss, but a share that drops that heavily, for instance, it's difficult. And be aware, next week on the 23rd, we got the figures of Nvidia.
Yeah.
Big expectations there. If they don't meet the expectations, yeah, something might happen there as well.
Yeah, that's-
You be aware, but also just be if they exceed the expectations. Whoa, what they've done in the last quarters.
Very interesting.
Interesting times ahead of us. Thank you for watching.
Thank
Give
you
us
very
your thumb, as my colleague always says.
Bye.